What's up, Bueller Buys? This is Leeland here. I was asked by Bueller to record a live trade for the live trade series on playlist. And I have 3 trades here that were not technically recorded live, but I posted gains screenshots in the post gains channel in the Discord server. And yeah, we're just gonna go ahead and break down these trades using TradingView's bar replay. So first things first, we're starting with Amazon here on July 18th around 12:30 my time, mountain time. So first things first, before I even am looking to enter a trade, I want to see, number one, price at a key level, a key, like whether it's a key support or key resistance. In this case, it's a resistance that we're looking at. So we see that price made this huge move down, and basically all I've done here is taken a Fibonacci retracement. We can see prices moved up between the 50% and the 61.8% fib retracement levels, and those are the main levels that I'm really focused on. So once I see price here, I'm gonna be zooming down to a smaller time frame, and what I want to see at these levels is a base to build. That's first things first. I want to see a base or some sort of structure forming at that level, just to give me more confidence in a move that may or may not come in either direction. So you can see we have that here. We have basically a high and then a low, and then retesting that high of day, retesting that low. So you can see we have a nice base forming here on the 5-minute. And right here, you can see now we've broken that low. So next thing I'm going to be looking for is I'm not taking any 40% entries or initial breakout entries on these trades. They're all going to be retest entries. So once I saw this price breaking on the 5-minute with rising volume, I went ahead and zoomed down again to the 1-minute, and I just waited until I saw this price retracing. And if you know me, you know I'm obsessed with fibs, so I'm going to take a fib from this high down to this low that was just created. And what I'm going to be looking for is any bearish candlestick patterns to show up either at this 50% control point, the 61.8%, or that low that we've marked from that structure that was created and recently broken. So I'm going to go ahead and keep playing through. No entry yet, still waiting on any bearish signal, and right there is when I entered this trade. So you can see we had rising volume from candle to candle. We had an inside bar right here on the previous candle, and then on this one we get a nice bearish engulfing, completely engulfing the previous candle. And so right there I entered 3 contracts into the 115 put expiring July 22nd. So it's 4 days to expiration. Now normally I would be looking to take initial profits right at this low, this recent low, because that's the most high probability target that I've found personally. So I would normally be looking to take profits on that low, but I broke that rule and did not take any profits off the table there. I just kept holding my 3 contracts. But I also want to make note of what SPY was doing at that time. So we can see I entered the trade at 13:30, and then if we go over to SPY, at that same time we had rising volume and we had this huge gap that SPY was filling. So even though I didn't take profits at that initial target like I was supposed to, I did have reason to still be in the trade. So I'm still holding here. The next major target, which is right here, this is a fib extension from this move here. I again ignored this target, breaking my rules, and didn't take any profit until I saw 115 hit. So this candle is when I first took profit off the table. I'm not sure what the percentage was. I don't have a screenshot of that, but the second contract I took off, so basically what I did here that I shouldn't have done was ignore a target here, ignore a target here. I mean, you can see that this level's been used in the past a couple times, like resistance here. So this is not the way I prefer to trade. I prefer to respect my targets, regardless if it keeps continuing without me, because I know if I make these habits of, disregarding targets, what's going to happen if the trade goes against me? Am I going to disregard my stop loss too and let these contracts run to zero? I would hope not, right? So let's keep playing. I'm playing through this. I'm still in one contract at this point. And I just want to make note to the left here, we're again at a very crucial potential support, which is the top of this big gap here. But at the same time, again, I'm going to go back to SPY. At the same time, SPY is still filling its gap to the downside. So we have conviction that this move can continue down. I'm actually going to move up to the 5 minute just to get through this a little quicker. So we can see price has just broken through, or is testing the gap range here. And then boom, we get another move down. I'm going to go back to the 1 minute just so you can see that this low was broken with increasing volume. I'm not sure why there's a gap there now, trading view. But the bottom of the gap was all the way down at 113.54. I did not hold the trade that long. Let's see. This is where I took profit for 90% total on the trade. So I was completely out before the gap filled, which it did eventually. Yeah, gap filled there. So yeah, that was that trade on Amazon. I did make a couple mistakes. Like I said, I ignored targets, this initial target of that low, the target of obvious resistance turned support here, and that fib extension. Yeah, so let's move on to Google. So again, similar setup, right? We're looking at these key fib levels from this major move down from 119.65 all the way to 108.42. So this is a different day, same week, July 20th. This day, we can see on the 1 hour we've already had lowering buyer volume up to this 61.8%. And on the 1 hour, we have this kind of shooting star candle that formed. So I'm going to go down to the 5 minute again. And we can see we're right up against that 61.8 from the 1 hour time frame and forming a nice base here. So we have lows holding right here and highs holding here. So we're just going to keep waiting, whether it breaks to the upside or to the downside. And then right there, we have rising volume on the 5 minute, breaking outside of that base. So this is when I would zoom into the 1 minute again and just wait, because we don't want to enter on that initial move. So right there we see a nice hammer form at the 114, which is the same fib from that 1 hour time frame. So it made a perfect move down from level to level. And this is where I drew this second smaller Fibonacci retracement So just like Amazon, I want to see price retrace to one of these levels, or even this low here. See, it's a different level. We can mark that. That's the low, the base that was broken. So once we see price move up to one of these levels, we want to see some sort of bearish pattern form. In this case, there is a hanging man there. That is a bearish reversal candlestick pattern, but that's not where I entered this trade. I'm still not in the trade yet. So I see this really weak volume. Now price is continuing up to that the low of that base there. And then right there is when I entered on this candle, 1259. So we had rising volume, candle to candle, and we had a bearish engulfing. So I entered 3 contracts here. Give me just a sec. So yeah, 3 contracts at the 114 put expiring July 22nd. And right here is when I scaled out of my first contract. So this is, in my opinion, a much better trade than the Amazon one, because I respected all my rules, including targets as well as entry criteria. And if it were to go against me, I would respect that stop loss as well. So right here, you can see we've moved down to this 38.2% fib right here, which happens to align with this low that was created earlier in the day, which was also used as resistance here. And I bet if we go further back, well, it's kind of unclear before the split, but either way, we have it here. We have resistance turn support. So who's to say price can't bounce from there again, right? So we scale out initially for 10%, still holding to, moving the stop loss to maybe break even at our entry point. So the next high probability target for me personally is this zone here. You should be taking profit or scaling out as soon as price is entering this zone, because you have this low that wicked down, but you also have this key 114 level that held really nicely. So price could easily bounce there and form like a double bottom or something. And so right there is when I'm scaling out of my second one for 27%. Like I said, we got a nice buyer reaction on that level, but didn't hold very long. As you can see, the next candle pushed down, and now we have another lower low forming, giving us more reason to keep holding that third and final contract. So I'm just going to go ahead and step through. Zoom out a little, see if we're missing any levels. In this case, looks like we might be, so we can mark this. See how there's a wick there that held this previous resistance level. So we can watch this level for a possible reversal to get out of this trade. Let's keep playing through. So we can see, okay, there, that low broke again with rising volume. So price did actually push back up and start to hold that level. And then right there is when I exited my last contract at 113.50. I was getting kind of nervous just because you can see on this time frame, at least, let me get a trend line. I don't usually use trend line, but you can see the lows kind of converging here with the highs, which, if you know your patterns, that's a falling wedge, which is a potential bullish reversal pattern. So yeah, I was fully out of the trade there at 41% on the last contract, but let's play through it and see what happened. Okay, yes, we got a push out of that trend line. So price did actually push lower. We could have maybe held it to that low, but like I said, I'm happy with this trade. I respected my targets. I took profits with reason. And so let's go ahead and move on to the third and final trade, which was on Shop and was actually a loss. And we alerted this trade in the Mustache bot channel. So same exact setup as Google and Amazon, right? We're looking at this obvious resistance, like we've had a rejection here, rejection 3, 4. I mean, you can count that as well as a fifth rejection of this 40 level. So once we saw price hitting 40 again, we were looking for another rejection. And what went wrong here with this trade is we didn't wait for this base to build and break like we did with the other two trades. The trade was actually alerted and entered on this shooting star candle. I jumped the gun a bit and paid the price. So we can see price just went along building its base like we should have waited for. We ended up looking at this here to maybe take profits on a couple dollars, but we wanted to see that 40 break for the bigger move, and we actually ended up cutting for a loss, I think around here as it was going back towards the high of day, just because this was on a Thursday and the contracts were expiring the next day. So yeah, but we can see the next day actually gaps down. And does hit all those targets, but we still want to wait for the price to come down and retrace, right? Just like we did with the other two trades. So in this case, that would be your entry. You get a nice big shooting star with a wick to the top side, rejecting that 61.8% golden pocket level. And then we get a move down, rising volume back down to that low of day. And continuation all the way down to this 38 level. I think it goes even further. Zoom out to the 5-minute here. Yeah, so it broke this low as well. Another nice little retest there. So you can see it went from that 50% control point, made a move all the way down to that next 50% there. And at this point, the 40 puts were so deep in the money. That should have been a win if we had played by the rules and waited for this base to break and retest. But that's all I have for you guys, and thanks Bueller for asking me to do this, and hopefully you guys enjoy.